Hello traders, hello everyone, my name is Horvat and welcome to our new update for May 7th after the US non-farm payroll report. So the US jobs were a big miss. So what we are seeing is actually one step again away from or one step back, I should say, from a tapering. So inflation, however, is still of course going to stay here, but there are a few Fed members that already says that the economy is most likely going to be back in normal or recover significantly later this year. And what we are seeing is, of course, a similar response on the markets. We are seeing metals that came to the upside after the US jobs came out. S&P futures came close to the highs, while we are clearly seeing copper making a very strong recovery. So copper is a very good indicator for overall economy and inflation. And of course, what we are seeing here is a very strong break out of this triangle, and we are now tracking a wave 5. So yes, there can be some limited upside, but this wave 5 still has to complete itself with the 5 subwaves before we may say the trend is coming to an end. So for now, this is still very strong trend that could resume for the next weeks, especially after retracements. And on the other hand, of course, this is disinflation fears, and overall situation is definitely bearish for the US dollar. So on the other hand, we should also keep an eye on Aussie. We've been actually looking here on Aussie dollar and copper. We were looking higher. I mean, on Aussie, this was published on at the start of April, actually exactly 1 month back. So we were looking for potential supports here in a wave 4 at the same time when we were looking and expecting this triangle to complete wave 4 to see copper prices higher, and this should also then obviously form a base here for wave 4. And this actually unfolded pretty nice, and looks like that there is still room for more upside here on Aussie. Also, as I said, metals are doing well as well, so I think that this could be a very important market to track. If you look at silver, silver is actually having 2 wave counts, okay? And I've been tracking these 2 wave counts for the last 6 months or so. The first and primary wave count, which is still very valid, is a flat correction. Okay, it's a running flat where you have a free wave drop for a wave A, then you have a complex corrective rise for a wave B, which, as you see, moved slightly above the previous peak before market came to the downside in 5 waves. Not impulse, but rather this is rather an ending diagonal here in wave C. So if that's the case, then this level should hold while the market is currently rising. So more upside can be expected while we are trading above this level. So again, to repeat, this is the structure that I'm referring to: free, and then you have a 5-wave drop. Okay, so this is called a flat correction. Of course, as soon as you see a very strong recovery, that's when you can anticipate more upside because correction is completed. Then another wave count is a triangle, a running triangle, where I'm missing another leg. A, B, C, D, and looks like that wave D is now close to resistance and you are expecting wave E. And what is in both cases very important, that you have the same invalidation level. So even if I'm tracking 2 wave counts, I have the same implication. I'm expecting more upside after retracement. And looking at the 4-hour chart here, what I really love about this one, especially if I review some of the developments here at the start of April and at the end of March, well, we have seen a very strong drop here. We have seen market moved beyond these January levels, but only temporary. In fact, a lot of traders probably were looking for a significant breakdown, but actually market reversed very quickly and recovered back above this trend line, potential wedge pattern. If you're familiar with basic technical analysis, and if you ignore the Elliott wave principle, then you can still see the powerful technical analysis which has been pointing to the upside. After this failure break and then a sharp reversal above the wedge line. This same wedge line then later proved to be a very nice support. So what I see here right now is a very nice and strong recovery. In fact, I can count this maybe even as an impulsive price action, okay, in 5 waves. So it means that after a 3-wave setback, I would be expecting more upside, okay? So just to sum up real quick here, we see still inflation in the cards, jobs are not, at least for now, it's not looking good. So policy will probably for now remain unchanged, meaning that commodities could recover, dollar could see a little bit more of weakness, which makes us the perfect case for strong commodity currencies, and of course metals, which in my opinion are consolidating and are one of the best to look for potential investment opportunities, because you have stocks, commodities and everything, it just at some extreme levels, while these metals, I mean, like gold and silver, are just going sideways. So I think that sooner or later there will be a time for a break higher on those markets as well. Okay, but as I said, maybe after retracement, so watch on this wave E pullback, or maybe even wave 2 pullback. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Please leave me a commentary in this YouTube, and if you have any questions, I will be happy to get back to you. Okay, have a good weekend. Bye.